It's time for your personal bank show with Ferenc Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of a bank in formation. Take charge of your financial future with your personal bank. Now, here's Ferenc Toth.
Well, I want to welcome everybody to the Your Personal Bank Show, and it's pretty exciting. We're expanding our market, and it's exciting to be on this medium. I've been sharing this idea about Your Personal Bank for a number of years. I've been speaking to investor groups around the country. I've been on the radio. So it's just been exciting to share this idea and what it is, how it works, and how it changes people's financial futures. And so the bottom line is what we do. You know, the first question I get is all the time is, well, what is your personal bank? Okay. And your personal bank is basically, it's a concept where we basically look at what we do. It's a two-step process, and it's really quite simple. And that is, we take a high cash value policy, okay, and the idea is to maximize cash value. It's really that quite simple, okay? This is not the type of policy that most people are familiar with, okay? What we're doing is we're actually growing money on a tax-favored basis, okay? And the goal here, the focus is, again, to maximize cash growth, liquidity, and reduce taxes. Then the second step is we establish a bank line of credit using the cash in the policy as collateral. Now, the benefit of this is, the bottom line is you can create positive arbitrage. Now, what is positive arbitrage? Well, it's actually very simple. What it means is you're earning more on your money than you're getting charged when you use it. So again, when we do this, when we set up this high cash value policy, by the way, these things, we have products today that are still paying 6%. They've been paying 6% for the last 25 plus years, okay? And we have companies that have never missed a dividend since literally before the Civil War. Now, when I say that, when I share that with people, most of the time they're surprised or shocked even. And I get this from clients and folks I talk to all the time. Oh, wow, I had no idea that that was the case. And so I'm just throwing it out there really quick so you understand here that you can earn up to 6% dividends even today, even in today's low interest rate environment where we're at right now. And then by setting up the bank line of credit, you can access those funds. And the rates they're charging today is in the 3 to 3.95 range, depending on the amount of funds we're dealing with. Now, I ask a very simple question to people when I introduce this idea. This is the question that I ask. Well, if you're getting credited 6 and you're getting charged in the 3s when you access the money, what's your money doing? And the answer is obvious. It's still growing. And here's the power. Here's the game changer. Again, I'm going to throw it out here right out the gate, and then we're going to talk about this in further depth, and I'll share a little bit more about myself. But here's the game changer. And the game changer is this. So if you want to, and I just want to say this, if you get one thing out of the show today, I want you to understand, this is the one piece that I want you to understand. Remember, you're getting credited in the 6 range, you're getting charged in the 3 range, you keep the difference, the positive arbitrage, 2-3% positive arbitrage currently. But remember, that's on money you spent. Now think about that a minute. This is on money you actually spent and used for what purpose? Did you pay off bills? Purchase items? Invest in other assets? See, you can do all of those things. It doesn't really matter. So the point I'm wanting to help people understand, and this is why I share this idea, why I share Your Personal Bank, and I've been talking about this for years, is this. You can actually earn interest on money you spend. And I'm not aware of any other avenue, any other financial product, tool, or idea that allows you to accomplish that. And the thing is, do we spend money? Of course we do. We all spend money, right? What if you could earn interest on some of that money you spent? Would you have more money in your pocket? Would you have more money to supplement retirement? And the answer to all that is, of course you would. Now, I'm going to go into this a little further and share how this works and help people understand and explain this further. But what I want to do is take a minute or two and kind of share with you a little bit about myself, where I come from, and how we arose at this and started sharing this with our clients. See, who I am, basically, like I said, I've been teaching and educating and speaking on this concept now for 7 or 8 years. I've been in the financial industry for now over 25 years. I've owned an agency. I'm actually the president. I was the founder and president of Secure Estate Management. And one of my most recent endeavors is I'm the chairman of the board of an FDIC insured bank in formation. We're in the process of starting a bank, a brick and mortar bank that we're all familiar with. And so what a lot of people say to how did you come up with this idea as I share this with folks? And the answer is, well, I have a rather unique background in terms of the financial industry goes. Being an entrepreneur, I've owned several businesses, actually. I've owned a retail business. I've been a real estate investor. I've owned a service business and a financial agency. So I'm in the process of starting a bank. So I guess this will be my fifth endeavor as an entrepreneur in my career. And those are some widely diverse type of businesses. I was a contractor for a while, too. My wife always says I'm kind of a Renaissance man. My challenge in life has always been I learn about something. I've always been coachable. I've always enjoyed learning new things. I enjoy new challenges. And I'll learn something, and I'll feel like I get to the point where I master it, and there's just not much more to learn, and I get bored. And I don't know if any of you other entrepreneurs can relate to what I'm saying here, but sometimes you get bored if you're not getting challenged. Well, what's the cool part about the financial industry and what I've been doing with the personal bank is it continues to challenge me. Things change, rules change, things happen along the way. So it's been the one thing I've been able to sink my teeth into and stick with over a period of time and, well, frankly, help a lot of people along the way. So I find that's the other thing my wife will always say. She'll go, I can tell you had a good day. And I said, what do you mean? She goes, your eyes are lit up. You're excited. I said, yeah, when the light bulb comes on, and this is really my motivation for doing this show. I've been on the radio now for some time, last couple of years. Well, I've been speaking to investor groups for the last 6, 7, 8 years, I think it is, around the country. My passion is when the light bulb kicks on, when somebody gets it, when they understand where, oh my gosh, I can change and enhance my financial future dramatically, and I had no idea I could do that before, that is exciting. So that gives you a little bit of idea, a little bit my background, where I come from a little bit, and why I'm on the radio, why I'm sharing this idea, and why I'm sharing this with folks. And it's fun working with people and clients, and again, working with them, changing their financial life, improving their businesses, and just making things better all around. By the way, the company that I started, Secure Estate Management, we'd 16th year, A+ rated, all that good stuff. Obviously proud of that. And like I said, being the host of these radio shows is pretty awesome. The Your Personal Bank Show has been a great blessing, and it's given me the opportunity really to share this idea with a lot of people, just a bigger platform, more folks, you know what I mean? And the last thing I want to share about myself, or two last things, is what's important to me. Well, you've heard me mention my wife a couple times. It's my family. It's my wife and 2 daughters. In fact, one of our daughters was diagnosed with autism when she was 4. She's now, she can't believe it, she's going to be 17 this month. And it's been a special blessing. My other daughter's a professional model. That's been an exciting process. She's 14. And so my family, my wife, and my princesses, those are my reasons for doing this. So I'm going to encourage you to stay tuned in the next segments, because what I'm going to be talking to you about more is about your personal bank, how it works, how you can create positive arbitrage, how you can reduce market risk. Oh my gosh, what's going on with the economy and the government and everything else these days? Folks, there's a lot of uncertainty about where things are going, what's going to happen. I don't know either. I don't think anyone does. But to have some diversification, if you're talking about your portfolio, talking about your retirement, putting some money away where it has some guarantees, get some decent returns. I already mentioned 6% dividends, even today, okay? By the way, we can show you how to grow your money tax-free, income tax-free. You can access it income tax free and pass it on to your heirs if income tax free if you set it up properly. And again, we have a new administration coming in. A lot of people believe the taxes are going to be going up as a result. So having some money set aside where it's on a tax-free basis just makes a lot of sense. And these are some of the things that your personal bank can do, but maybe the most important one is control. You can get back control of your money. I mean, does anybody feel a little bit of out of control these days with what's going on politically and with uncertainty and what's going on out there? I know there's a lot of that and a lot of that feeling going on right now. And one of those securities, one of those pursuit of happiness, which is, by the way, in the Declaration of Independence, is economic security or economic success, right? That is one of the basic freedoms we have as citizens of this country. So to ignore the economic aspect, I say ignore it at your peril. I'm not saying that money is the most important thing, but it's certainly one of those things that's important in our lives, isn't it? And again, to ignore that type of thing, my gosh, that just can cause a lot of problems and stress. Oh, I almost forgot. I wanted to share. There's one last thing I want to share about myself, and we'll get into this, is what do I enjoy? I mean, I've been a semi-professional bass trombonist, for a long time. I served actually in the U.S. military. I was in the Army. I was blessed to be able to play at the White House and a number of events around the country. I was part of the Old Guard. I played in college. It actually helped paid for college for me, so it's been good to me. And I still, up till COVID, of course, I've played in various church and jazz groups and things like that. So that's kind of what I do for fun, as my, so my escape, or whatever you want to call it, my passion. So, what is your personal bank really? What does it do? Well, first of all, this is a financial tool that is used commonly by banks, business owners, corporations, professionals, wealthy families, you name it. This is not a new idea. It's been around for quite some time. Like, we're talking decades and decades, okay? So just because you haven't heard about this doesn't mean that it doesn't exist, okay? So what I'm going to really encourage folks to do is stay tuned in the next segment, because what I'm going to do is really talk about your personal bank, how it works, and how it can truly enhance your financial future. So stay tuned.
For more information on your personal bank, feel free to contact Ferenc at yourpersonalbank.com. Back to Your Personal Bank Show with Ferenc Toth.
Welcome to the Your Personal Bank Show. In the first segment, we were talking about, well, how does your personal bank work? And I shared a few key things about it, and then I shared a little bit about more of my information about myself. And what I would do is I would encourage you that if you want some more information on this, and you missed the first segment, go to yourpersonalbank.com. You can listen to any of the previous recorded shows, of course, and there's over a year's worth of shows content on there you can listen to anytime you want. So I strongly encourage you to do that. But what I want to do is talk about here is, what is your personal bank? How does it work? And again, really what it is what we're doing is we're taking a high cash value policy that's established to maximize cash-favored growth. Basically, we're trying to grow money on a tax-favored basis, okay? And then the second step, like I said earlier, is then we set up a bank line of credit is established using the cash in the policy as collateral. Now, this is important to understand why we're doing it, because first of all, when I say high cash value insurance policy, most people do not understand what I'm talking about or are unfamiliar. See, these are policies that are designed to maximize growth and liquidity while minimizing the death benefit. See, this is the opposite of what most people view or use life insurance for. Most people view life insurance as something where, well, what's the minimum premium I can pay for the maximum death benefit? And that's what I call a death benefit protection policy, right? And if you have a death benefit protection need, by all means, you should address that. I have those needs myself with family and business. Okay, so I have some of that type of insurance. But that's not what we're here talking about today. In fact, this is the type that banks, corporations, wealthy families, for example, very commonly use where the average American is not so, well, they're just not aware of it. And I know this for a fact to be true because, as I stated before, prior to COVID, I was traveling the country, speaking into a number of investor groups all over the country, and they were doing workshops and all these kinds of things. And I would ask, one of the first questions when I ever did a workshop, I would ask is, how many people here are familiar with, the insurance banking or your banking concept or your personal bank or anything like that? And I would literally get out of a room of 100 people, 2 or 3 hands typically would go up, and that's it. Now, understand, these are people that are actively learning, active investors. These are people focused on money and wanting to learn more. This is not your average person out there. And I would be constantly shocked at how few really had even been introduced to this idea. And that's when I knew I needed to get the word out to more people and how, like I said, the radio shows came about. But anyway, what the biggest challenge I have, and I'm going to tell you that right off the bat, is there's, again, a lot of people view insurance as an expense. Again, it's a death benefit protection tool. And they'll hear we use insurance as a tool, and they'll say, I don't want another bill. They'll stop listening and miss the whole point. And again, this is not what we're doing. It's completely the opposite of what most people view or use insurance for. As I stated in the first segment, we have companies that have been paying 6% dividends for the past 25 plus years. In fact, I have a chart that'll show you the actual dividends that pretty much most of all the major dividend-paying companies have paid over the last 25 years. It's eye-opening. Now, I would share that chart publicly if I could, but I've got this not from the insurance industry, but from a financial institution. And they asked that I not share it publicly. I can do so because it's not public record knowledge. Excuse me. But I could. They allowed me to share it individually. So if you contact me and you want to see this dividend chart and see who's been actually paying what rates, again, contact us at yourpersonalbank.com. I'll be happy to get that or send that to you. And like I said, many of these companies have never missed a dividend literally since before the Civil War. Now, why is that important? Well, they've kind of been through it, if you know what I mean. They've been through the Civil War. Certainly was an uncertain time, no question. The Great Depression, another time of economic uncertainty, of course, and paid dividends every year straight through it, through world wars, civil unrest, you name it. And so I get a lot of people these days in particular, again, referencing the current political situation. There's a lot of uncertainty. There's a lot of angst about what is going to happen. What direction are we going to go as a company? As a country. I've talked about that a lot myself, both with clients and even on the radio. And it's important to at least have a portion of your money, have a bucket. If you're talking about, putting money away for retirement or any of those kinds of things, it's really important to have a portion of that money in a safer bucket, something that has guarantees, something that, isn't going to go anywhere and be subject to the volatility of market risk and various things like that. And your personal bank can accomplish that for you. Now, that's the first step. We, again, set the high cash value policy up, designed to maximize cash growth. We've got 6% dividend companies even today with long, strong history of dividend paying, tons of cash reserves. These are A-plus rated companies. These are names that you and I are familiar with, and they're well positioned to pay dividends going forward for the foreseeable future, okay, even in this low interest rate environment. The second step is we then set up a bank line of credit. Now, the line of credit, the collateral for the line is the cash and the policy. And by the way, there's no loan fees. Interest is only charged when you access the funds. And by the way, the interest on the bank line is typically tax deductible if it's used for business purpose. So for entrepreneurs, my gosh, this can be a really, really good scenario. Now, again, the cash and the policy increases annually because, again, if you're getting dividends consistently on a regular basis, that means your money's growing every year, right? Now, the bank lines will typically loan up to 95% of the cash available. And if the amount of cash available increases each year in two ways, one, if you add additional contributions, of course, and the second way is interest or dividends is getting credited, right? So it's growing each year, therefore you have an increasing amount of available funds each year. And the point I make all the time is we have companies still paying 6% dividends today or close to it. Well, which company we use, I get asked that all the time, and I'll get to that, but it depends on the situation, okay? And there's different costs and amounts of what you can do on which company makes the most sense. But if you're getting somewhere around 6% dividends, and then you access the funds, like I said, the bank lines, as I stated earlier, between 3 and 3.95, depending on the amount of funds, well, that means you're picking up a 2 to 3% positive arbitrage, aren't you? And remember, there's the key point. This is the game changer, as I stated in the first segment. This is on money you spent. See, how do you earn interest? How do you make money on money you spend? And this is where this gets people's attention, and they start to think about it. I ask this question all the time. If you're earning 6 or somewhere around 6 and you're getting charged somewhere around 3, in the 3s, what's your money doing? Well, it's still growing. You're keeping the difference, aren't you? Because, and that's, by the way, that's called positive arbitrage. You're keeping the difference. And to help understand this even further, you think about this a minute. When you access money, are you taking the money from the insurance policy, from the insurance company, or are you taking the money from the bank? The answer is the bank. Now, because all the cash is still in the policy, it keeps earning, doesn't it? It keeps growing. It's that simple. And you keep the difference. And again, I can't stress this enough. You're making the difference on money you spent, money you allocated elsewhere, money you used to pay off debt, or money you used to purchase an asset or increase your business. Stay tuned in the next segment. We're going to talk about this further and the uses of how this can enhance your financial future.
For more information on Your Personal Bank, feel free to contact Ferenc at yourpersonalbank.com. Back to Your Personal Bank Show with Ferenc Toth.
Welcome back. So today we've been talking about Your Personal Bank, what it is, how it works. Remember, we're setting up a high cash value policy designed to maximize cash growth. We got companies paying 6% dividends. Even today, in current interest rate environment, have been doing so for the last 25 plus years. I'll show you which companies. I have a chart showing all the top dividend-paying companies over the last 25 years. It'll become immediately obvious who you want to work with. And again, these are all name brand, A-plus rated companies, tons of cash reserves. They're in well positioned to continue to pay strong dividends going forward. And many of them have been paying dividends and never missed, literally since before the Civil War. So how's that for a track record and stability and getting through uncertain times like I feel like we are right now? Then again, the second part is setting up a bank line of credit where the cash in the policy is collateral for the loan. Okay, these are super easy. This is questions I get all the time. These are super easy loans to qualify for because remember, the cash is there. I mean, it's like a one-page app. It takes a couple days to get approved. I mean, it's a no-brainer for the banks. Frankly, the only way you can't get approved is if you have like judgments or liens. I mean, outside of that, pretty much you're going to get an approval. And the key is you're going to be able to, the money's going to get credited and grown in the 6% range, and you're going to be able to access it in the 3% range and keep the difference when you use the money. And what can you use the money for? Anything you want. Do you have any debt? What about knocking that debt off? What about knocking it down and the money you use to pay the debt off, you actually earn interest on? Have you ever thought about that? Because see, here's one of the big things. Here's one of the big points I share with people all the time. What most people do about money, the mistake they make, a huge mistake I see people make all the time, is they earn money, it comes in, yet most of it goes out the door, basically in paying bills and expenses, right? And what happens is once you pay that bill, you pay off that debt, you pay that bill, you purchase that item, whatever it may be, those dollars are gone forever, aren't they? Will you ever earn any interest on that money you paid to, say, pay the mortgage payment or the car payment or go out and buy some clothes or food or any of that? The answer is no. It's gone. What if you could flow it into a personal bank policy, high cash value policy, you earn some interest on it. Then you accessed it from the bank line of credit and you got charged a lower rate, so you kept the difference. How would you like to get paid to keep the difference, make 2 or 3% positive arbitrage or interest on money you spend on food, clothing, your business? paying off debt, car loans, home loans, you name it. Would you have more money in your pocket? Over time, big time. The differences I see with clients I've been working with for a number of years, in some cases, is quite astounding. It's amazing because how much do we spend? Take a typical household in America. How much do you spend a year just in your household? You know, businesses can often spend many times more than that. But I don't know, is it $50,000, $75,000, $100,000? You know, each household is different, right? But I'm just talking about normal stuff, everyday stuff, right? What if you could earn some interest on that? You're not doing it anyway. You're not doing it now. So what if all of a sudden you were able to pick up some interest on that outflow of money going out over time, then add a decade to that, or 2 or 3 or more? Would you have more money in your pocket? Would you have more money to spend? Would you have more money to supplement retirement? And the answer to all those questions is absolutely. Now, as far as these bank lines of credit, I want you to understand something. This is a very specialized area of lending. And I shared with you earlier that, you know, I'm a chairman of the board of a bank in formation. I understand a lot about banking. I'm not going to say I'm a total expert, but I do have a pretty fair understanding on banking. And I'm going to tell you, most lenders, the vast majority of lenders, you're not just going to be able to go to your neighborhood bank and say, hey, I want to get a loan against the cash value of my policy. They don't do it. There's literally a handful of banks in the United States that handle or offer this type of lending. They specialize in this. And we work with basically every one of them in the country that we're aware of. And by the way, I'm always constantly asking the senior VPs and presidents. I know the VPs and presidents of several of these banks, actually. And I ask them all the time, who's your competition? Who else is out there doing what you do? And the funny part is they'll give me a names list of a handful of names, and they all give me the same names. They're not aware of anyone else either. So I'm not saying anyone else out there is not doing it, but they're not aware either. So we can recommend who's got the best rates for you based on your situation. Obviously, there's based on how we structure the policy, the size of it, the amount of funds. There's various factors that determine which bank line of credit is best for you, but we can recommend any of them, okay? So that's the bottom line in terms of what your personal bank can do. It can pay off debt faster. You can purchase items. You can increase the rate of return on investments. And that's one of the things I want to talk about further in the next segment on how that can make a difference on the overall return of your monies. There's many things that can be done here. So stay tuned in the next segment. Don't miss it.
For more information on Your Personal Bank, feel free to contact Ference at yourpersonalbank.com. Back to Your Personal Bank Show with Ference Toth.
Welcome back. We're rounding third and wrapping this up today, but I'm going to tell you what we're talking about today, Your Personal Bank, really is something that can truly enhance your financial future and really change the situation for both you, your family, your business. Now, like I said, what is Your Personal Bank? It's really quite simple. It's a two-step process. We set up a high cash value policy. It's designed to maximize tax-favored cash growth, okay? Second step, we set up a bank line of credit using the cash in the policy as collateral. The key point we're trying to accomplish here is simple. We want to earn more than we're getting charged when we access the money. We have companies, as I stated several times now, that are paying 6% dividends even today in the low interest rate environment and have done so for the last 25 plus years. I'll show you the chart of all the top dividend paying companies, what they've actually paid. And they're well in position to go forward. Some of these companies, by the way, have never missed a dividend since before the Civil War. So when you want to talk about a track record, frankly, that's really hard to beat, okay? And then, of course, the bank lines of credit. We have certain banks have specialized, I should say, in this type of lending. And most banks don't offer this, but there's a few that do. And they use the cash in the policies collateral. And their rates are in the 3 to 3.95 range, again, depending on how we structure it and the amount of funds. So my point is simple. If you're earning 6 or close to 6 in your dividends, you're getting charged in the 3s when you access the funds, what's your money doing for you? Well, it's still growing. You're keeping the difference, aren't you? And that's the power. That's the game changer of your personal bank, because show me. And folks, I've been talking about this for years. I've been on the radio for a couple of years. I've talked to thousands. I couldn't even tell you how many people I've presented this idea to, and many of them are hundreds and hundreds of clients. Here's the thing. Is there another way to earn interest on money you spent? Remember, what did you do with the money? Well, some of the most common uses I see all the time are debt payoff. Do you want to reduce your debt? I mean, for most people, that's a real positive thing to do. And there's people out there, we all know, some of them are popular names, that teach people how to get out of debt. Okay? Well, here's the thing. I'm all for that. I think getting out of debt is a smart thing in general. Not always, but definitely in many cases, a smart thing. And as a whole thing, I always discuss about strategic debt versus consumer debt. That's a topic for another day. But if you have consumer debt, certainly credit cards and any kind of high-interest debt, that's something you do want to get rid of, and get rid of as quick as possible, because that stuff can really hurt you financially. This is a situation where you can actually pay debt off and still earn interest on the money you use to pay the debt off. I'll use a quick example. Yesterday, one of my clients called me. He says, he was finishing up his taxes for this year, had a good year. He's going to have to pay some taxes. And he asked me a simple question. He had set up the personal bank. He has some cash in it. He has a bank line of credit in place so he can access the money and get the positive arbitrage, keep the difference, right? And he said, Ference, should I pay the tax bill? Should I pay the tax bill out of pocket? Or should I take that money, put it into my personal bank, and borrow it from the bank line of credit and pay the taxes? And I asked him a simple question in response. I said, this money you're paying the taxes on, do you want to earn interest on it or not? And he kind of laughed. He says, I get your point. Because, again, the point is simple. If he took that money and paid his taxes with those dollars, would he ever earn interest on those dollars ever again? The answer is no. Use the money to pay the taxes, right? And I don't care if you're paying taxes, you're purchasing items, you're paying bills. I don't care what it is. It's the same purpose, the same process. And I said, why not earn 2 or 3% interest on the dollars that you use to pay the taxes? Oh, by the way, you're not only going to earn interest on those dollars, you're going to earn interest on that for the rest of your life. Now, this guy happened to be a fairly young guy. He's probably going to live another 50 or 60 years, frankly, just being statistically speaking, okay? What do you think that's going to turn into over his lifetime? These things turn into some serious money when you look at it over time, okay? The other thing I see, so paying off debt, okay, or expenses, things like that, that's a big common use I see for this. Purchasing items, that's another one. I mean, we all purchase items. We all buy stuff, right? We buy clothes, we buy food, we buy cars, we buy things, right? And, a good example like the car one is a great one where you have a big ticket item, you're going to purchase an item like that. Most of us have a couple of choices. We can either finance it or we can pay cash for it. If you have the money to pay the cash, that is. So if you have the money to pay the cash, you can, again, pay cash or finance, right? Which should you do? And there's arguments both sides about how that should be done. Well, here's the reality. If you use the personal bank, there's a third option. That's what most people don't realize. See, the thing is, if you pay cash for a vehicle, of course, you're not paying interest. You're not paying interest fees. But what you are doing is you're giving up the ability for those dollars to earn interest for you in the future, aren't you? No, you take that money and you pay cash for a car. You get the car, of course, but the dollars are gone forever, right? Will you ever earn interest on those dollars in the future? And the answer is no. If you finance, you're not allocating your dollars, but you're paying interest to a finance company, so the car ends up costing you more, doesn't it, than the original purchase price. So you actually pay more for it. So, frankly, from a financial standpoint, that can be the worst option, okay, is to finance something. Well, guess what, folks? There's a third option. And this is the one, again, most people are not familiar with, and why I share this on the radio. And why I encourage you to go to yourpersonalbank.com for more information and learn about this and ask questions. By the way, I have a lot of folks that contact me at our website and just want me to answer a question on the air. We do that all the time. So I encourage you to do that. But what is the third option? Well, it's real simple. If you had the cash for the car Why not put in the personal bank policy, insurance policy, then access those funds from the bank line of credit and buy the car, yet pick up 2 or 3% interest? Doesn't that make more sense? What if you don't have the cash to buy the car? Well, could you pay the interest to yourself versus a finance company? Would you rather earn interest on the money, or would you rather pay interest to a finance company? You see what I'm trying to say? If you understand the difference, if you understand you want to earn interest rather than pay interest, you're going to be far more ahead financially than the average individual, than the average American. Okay? So these are the kind of... Now, the last one, the third one, which sometimes get people the most excited, is you can increase the rate of return on investments. Like, how do you do that? Again, it's quite simple. I share this with people all the time. You know, if you're going to purchase, you can take your money and invest, into an asset for whatever reason. When you take those dollars and you purchase that asset, and I don't care what the asset is. Stocks, bonds, mutual funds, real estate, cryptocurrency, gold, I don't care. It doesn't matter. The asset that you're purchasing has no material effect in terms of getting positive arbitrage and increasing the rate of return. Let's assume your asset that you invest in happens to have a 10% rate of return. I don't know, but let's just use that as a number, as an example. Now, my question to people then is, I always say, well, would you rather earn 12 or 13? Well, that's pretty obvious. How? Well, if you put the funds into the personal bank policy and then access them from the bank line of credit and then purchase that asset that gives you the 10% return, aren't you still picking up 2 or 3% positive arbitrage in the policy? Or the combination, the difference of the interest you're earning in the policy and what you're getting charged of the bank? And the answer is yes. So guess what? You're still making your 10% return on your asset, whatever that asset is, right? And you're picking up the positive arbitrage with the personal bank combination. So you're making now 12 or 13%. I've had some people say to me, well, a couple percent, that's no big deal. Folks, if your return on your investments is 10%, and I think most people would agree that's a pretty darn good rate of return, you just increased your rate of return by 20 to 30%. Folks, that's huge. And you add that up over time, do that for a decade or 2 or 3. Are you kidding me? The difference, if you understand compound interest, and the difference that would be can be massive, okay? So my point is quite simple. We use this as a tool for many reasons, for many purposes, for many different people. This is an idea that's been around for a long time, decades and decades, and it's been used quite commonly by banks, by corporations, by wealthy individuals and business owners and families. It's not been shared by the general public very often. Actually, quite rarely, as I stated at the beginning of the show. I'll talk to a group of investors at a workshops that I was doing prior to COVID, and I'd have a group of 100 investors in the room, and literally 2 or 3 would raise their hands when I'd ask who's heard of this idea or been introduced to this idea. And that's, by the way, that's true for financial advisors, CPAs, attorneys, you name it. I have a lot of those that are clients today as a result of me introducing this idea to them. Okay? It's not that they're holding something back from you. They're just not aware of it themselves in most cases. And if somebody's not aware of something, how can they bring it to your attention? You see what I'm saying? The point I'm trying to get at is, unless the financial advisor that you're working with or talking to is used to dealing with bank boards or corporate finance boards or family offices, which, by the way, what a family office is typically a family or a group of families with 10 million liquid assets or more to invest. That's typical. Unless your advisor is familiar with or deals with those types of scenarios on a regular basis, they're probably not even aware of this concept, or very vaguely. We'll put it that way. They're not well versed. Okay. I've been blessed and fortunate to be involved with some of those scenarios. I am on the bank board. In fact, I'm the chairman of the board of a bank that we're in the process of opening. So I've been blessed with these opportunities and be introduced to some of these scenarios. And that's why I became aware of it, started using it ourselves for our family, for our business, about 7 or 8 years ago. And has it made a difference? You betcha. Big time. It's smoothed out the edges of the ups and downs, okay, by having cash reserves, having funds available, and things like that. And like my wife said to me one time a couple of years ago, we've been married, I guess, 20 years we're coming up on. And she said to me one day, you know, we've had times in our marriage where we've had money and times where we haven't. Okay, I told you I've been an entrepreneur, so any entrepreneur that's listening gets what I'm trying to say. You have those ups and downs. And she said, you know, money doesn't make you happy, but it certainly eliminates a lot of stress when you do have enough, if you know what I'm saying. So guess what I'm trying to say is when I talk about changing people's lives. Now, if you want to learn more about this and you want some more information, there's a couple of books I'm going to encourage you. I always encourage folks to read. Of course, go to our website, yourpersonalbank.com, for more information. Contact me. I'd be happy to talk to you. Yes, you'll get to talk to me if you want to. If you just have a question, want more information, be happy to send that to you or answer a question or set up a Zoom go-to-meeting kind of thing or a call. We could, if you just have a question you want to ask over the air, just say, hey, I got this question I'd like to hear over the air. I'll do that. We're going to be on. We're on the radio. You can hear us. But Financial Independence for the 21st Century by Dwayne Burnell is a book I highly recommend. That's my favorite book on the personal bank concept. And as far as taxes go, remember, we can grow money income tax-free. A lot of people think that's going to become more important going forward with the political changes we have. There's a book called The Powers of Zero by David McKnight. Highly recommend you check that out. But again, contact us. Ask me for any questions you may have at yourpersonalbank.com, and I look forward to talking to everybody soon.
Listen Tuesday at noon and Thursdays at 1 for more information on Your Personal Bank. Contact Ference at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and baseline of credit rates may change. Contact yourpersonalbank.com for current rates.